Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Wednesday, August the 5th. The year's 2020. Let's talk trading. The hardest part about trading, part two. I guess my message hit home with a few traders yesterday based on some of the comments that I've received. Now, there's one thing about these videos, and that they are for educational purposes only. Your results may differ from mine. Trading is extremely risky. You can lose all of your money. If you need trading, investment, or financial advice, seek the advice of an accredited financial professional. Now, hardest part about trading is you. Said you just look in the mirror and then you'll see the hardest part about trading. Why do I say it? Well, another reason I say it is because of how we talk to ourselves. I mean, how many times have you basically given yourself a tongue lashing for a trade that you entered? Now, and the thing is, you have to remember what happens after you entered a trade is not affected by what you did before you entered the trade. In other words, all your analysis, all your indicators, all your tips, all your hunches, all your gut feels, once you put the trade on, none of that matters. The market's going to do what the market's going to do. So if you take a trade after you've done your analysis and it goes against you, don't beat yourself up. Because if you look, oh, if I would have just looked at that, because then I wouldn't have gotten in that trade. Well, maybe, maybe not. The thing is, for every trade that you lose money on, I would bet you could tell a story why you lost money. Think about it. Well, I forgot to do this, I forgot to do that, blah, blah, blah. No, no, no. I mean, you could just walk up to the computer, click the mouse to enter a trade on a coin flip, and you could win. I mean, is that trading? Is that the way you want to trade? Of course not. But the fact of the matter is, somebody else at the exact same time could be entering the trade in the exact same direction as you did when you flipped the coin. And they might be patting themselves on the back for that excellent trade entry and exit and how they took, however many pips they took. So you see, that's part of what Taleb was writing about in his book, Fooled by Randomness. We can think we are oh so smart, oh so good, oh so clever, but the market is just smiling upon us. Once again, what can we control? We can control the risk, how much we decide we are willing to lose per trade, right? You guys all know this by now, right? You can control that. So you can control the position size, you can control when you enter, you can control the direction of entry. That's all under your control. And you can control when you get out. That's under your control. But there's all those other things that aren't under your control. And that's what you have to get your brain wrapped around. You have to realize what's in your control and what's not in your control. And where the market goes next is not in your control. So you can enter a trade based on your analysis, your indicators, and it could go your way and you feel great. You think you're a genius. It goes against you, then you start wondering what you did wrong. You may not have done anything wrong. The market just went against you. That's it. There's nothing more to it than that. And so that's why we have, risk management in place, because the market can go against us. Now, if you aren't following your trading plan and you're just airballing, then you're just basically kind of gambling at the market. It's like just, randomly placing trades. And hey, you might be good at randomly placing trades, and you might actually make money doing that. But statistically speaking, you really don't have statistics on your side. That's the only difference here. I mean, that's all we can hope to do is find an entry where the statistics are on our side, that if we get in at a certain location in a certain direction, chances are the market will give us an opportunity to exit that trade with a profit. Might be small, might be large. And then, part of trading is we're going to take those losses. They can't be avoided. Sometimes you're going to get in the trade and it's going to go against you. In fact, I got in one trade. I went short, and I think it gave me the opportunity to take like a half a pip. And it was right at the end of the hour. And as soon as the next hour opened, the sucker went against me 5 pips so fast. It was like, holy cow. I just had to laugh. I mean, it was like, really? But but that's trading. That's the market. So you might as well just laugh it off and go into the next trade, because you have to take profit before the market takes it back. But sometimes the market doesn't give you a chance to take the profit. You might see it, and in a blink of an eye, it takes it right back before you could even click your mouse. But that's trading. So gaps have filled so far. We can see we're 64 pips above the weekly open, and we're 19 pips off the weekly high here. Now 20, we're 28 below the previous week's low, our high rather. So I don't know if the pound wants to try and push up or not from here. Why is that happening? Okay, this was the opening day for the week. That range right there, and you can see we busted through at 31.15, and we're about what it looks like 31 pips above that level at the moment. So anybody taking that opening range breakout, and you can see we're in the opening range for the year breakout right here now. And a green candle on the daily after 3 reds, and all of those look pretty much like dojis. I mean, very small bodies, more wick than body. And you can see here, the last inside bar in the daily on the pound was 49 days ago. That's quite a long time. 3 weeks ago and 3 months ago, we had inside bars. But there's some other pairs for those interested in inside bars. In fact, one trader had asked me a question about the inside bar, and I told him that, usually when price gets in between an inside bar, what this is showing is price has consolidated for a while, and usually price breaks out of that level. So that's the significance of the inside bar. Interesting, we had ADP numbers, but only 3 pairs are over 100 pips, with the pound leading the way, even beating the new beast. You can see here it broke out at yesterday's high, good for 43 pips. We missed the pivot again. You can see here we crisscrossed the weekly open a couple of times here. And we definitely have the range to allow the red rats to feast. So red rats, get ready. Once again, missing that pivot. Here we go. So we've got 1, 2, 3, 4 missed pivots from last month. I think we took out a pivot here. And then yesterday or the day before, we took out that pivot. And on the weekly, we took out this week's pivot, but we still have a couple left here in July. And showing, not much of a body, huge wicks, but in and out of the wick zones as usual. It's one of those statistical trades we like doing. And on my one of my scalping screens here, you can see how we took out that previous M1 high. Now, I'm going to show you guys something that I just noticed today, and it might help you. You see we have a turn trade here, bull candle followed by a bear candle. You see how there's no wick? Well, you see what happened? There was an opportunity to take some pips. On the other hand, you see a bear candle followed by a bull candle, no wick here. You see there was opportunity to take some pips. Then right here had the same thing. Now this one you would have taken some heat unless you just took a couple, but then it panned out a little bit later. So just something to look for. In fact, I'm working on an indicator to actually plot the line of the last occurrence here. So you might be able to use that in your trading. And these are the types of things that you look for, because sometimes I look at these patterns, it's just like, okay, I had the setup, but it didn't work out. Is there something? Is the market showing me something that I'm not paying attention to? And like I said, in this case, these types of setups, yes. I guess I hadn't seen those before. So flat top, flat bottom candles. And sometimes it could be just a point difference. And so in the indicator, I'm going to build a threshold so you can say how, if you want 0 tolerance or 0.1 or 0.2 tolerance, then you'll be able to do that. And trusty, just trading with H1 candle color at the line. The one modification or that Walmall and I are doing to this is we're looking at the previous H1 high. So like, for example, right here. So rather than wait for the candle to get here, if it hits this line right here, we'll just take that breakout. That's the way we're trading it. So that's one slight modification that we're doing. But this is trading, this is speculation. Nothing is guaranteed. Whether you're going to win or lose when you put that trade on, can't guarantee it. So you as a trader, you're the sticking point. But don't be so hard on yourself when you take a loss, because sometimes that's just part of trading. I mean, don't, because you've seen players in sporting events, they take a loss or strike out or they miss a basket and they just get rattled, or in pool you miss a shot and then your game just goes completely downhill. You just have to shrug it off because it's just an event. It has no meaning unless you give it meaning. I know that sounds zen, but it's the truth. So, fellow traders, just try and keep that in mind. So, don't beat yourself up. Focus, do your method, and then you should be able to make some pips. Because I always say it's not what you trade, it's how you trade it. So go out there and drain the banks. And if you're new here, click subscribe and click like. And if you're on Reddit, please give me some karma points. I'd appreciate it. TheRumpledOne signing out.